special profit segment, that is Profit Intelligence. We're speaking about oil marketing companies today. We've seen a sharp rebound in trade, surging from 9% to 15% over the past month. But what's fueling this rally? Soumya joins us with the analysis.
If you look at the share prices of all the three oil marketing companies, that is Indian Oil Corporation, BPCL and HPCL, the share prices have jumped anywhere between 9 to 15% in the last 1 month. But this is largely because the Oil Minister Hardeep Puri met analysts to address the issues that are affecting the valuations of the oil and gas company. And since then, we have seen a sharp up move when it comes to the oil marketing companies. But one should be cautious on the oil marketing companies going forward. Firstly, because the second quarter numbers, they are not expected to be that great. So what has played out so far in the second quarter, if you look at refining margins were lower, marketing margins were lower, crude prices were stable, and LPG losses on the positive side were also lower in the second quarter as compared to first quarter. Firstly, let's look at the refining margins. Now, if you look at the Singapore gross refining margin, they average around $4.1 per barrel as against $5.6 per barrel that we had seen in the previous quarter, a drop of close to $1.5 per barrel. And this $1 per barrel drop could lower the earnings or EBITDA of the oil marketing companies. If you look at for IOCL, BPCL and HPCL, the EBITDA drop could be anywhere between 10 to 11 odd %. This is generally what we see when there's a $1 per barrel drop in the gross refining margin, and the EPS impact could be anywhere between 19 to 20%. Now, when it comes to the marketing segment, this is the marketing margin that the oil marketing company earns by selling every liter of petrol and diesel. Now, for petrol, this margins came down by 17% on a sequential basis, and for diesel, it has come down by a massive 45% on a Q-on-Q basis. Now, this happened because of the rupee depreciation that we have seen. The margins have come down. Now, for every 0.5 rupees per liter drop when it comes to the marketing margin, if you look at the earnings of the oil marketing companies, that is IOCL, BPCL and HPCL, the EBITDA comes down anywhere between 8 to 13%, and the EPS impact is anywhere between 14 to 24%. Now, the impact for HPCL is much more because a marketing segment contributes much higher compared to the refining segment for HPCL in general. Now, if you look at crude prices, for the first quarter, crude averaged at around 67. For second quarter, it averaged at around 68, and the current prices are around 65. So not much of an impact is what we are expecting on the inventory side that could come in. But on the LPG side, yes, the losses were much lower because there was a price hike that was taken, and also on the international market, the LPG prices have come down. So losses for on the LPG side was much lower, but this won't be a worry for the oil marketing companies at this moment, given the fact that the government is compensating. But the two key segments that contribute to the earnings, that is refining and marketing, both are down in the second quarter. So the second quarter numbers would be weak for the oil marketing companies. Moreover, going forward, the biggest concern for the oil marketing companies right at this moment is the fact that there could be a potential cut in the fuel prices, or excise duty could be hiked by the government side. This is the biggest concern on the street, and this is because of the festive season or the upcoming elections that we are expecting for the Bihar state that could come in. So both these factors, and given the fact that there was GST cut as well, to make up for that loss, also government might look to increase the excise duty, and this is the biggest risk that has come in for the oil marketing companies at this moment. And if that plays out, then the marketing segment would see further earnings downgrade in the third quarter and in the fourth quarter as well. So that's the biggest worry that is there for the oil marketing companies. So do trade with caution.